What do you want? What do you want? Tell me, what do you want? Sorry for scaring you guys there. Andre here from fxlocalese.net. When it happens, we're there, we tell you, come along, join us, subscribe. Right, for today's video, I always try and make it a quick one, but never ends up as such. I get carried away. That's why I trade 4-hour candles. So for today's video, on risk management, I done a quick search on Google and on YouTube, and my son is, I think, he's 18. But if you were, let's say you were 12 years old or something or whatever, and he comes to me and he says, "Daddy, what is Forex?" And I'll tell him, go Google it. And he'll come back to me later and he'll give me the following answer. And before he gives me the answer, I'm going to give you the answer. Two variations of it, right? There's the world's variation, and then there's South African variation. And this is where I ask you, what do you want? Where we get things wrong. We want what the next guy has when it comes to Forex. We want what everyone talks about, everyone shows you, and it's a whole misconception. And because you continuously get caught up in this misconception, you may become a failure in Forex. Okay, so here's the search. Okay, and that's YouTube. Right, before I switch over, I'm going to go to World's Top Forex Traders. Right, and George Soros, I know him very well. This guy actually crippled the country. Right, he is, I'm surprised Warren Buffett's not here. But images, that's George Soros. This guy was actually, he came to America with like 5 pennies in his pocket. And you got to read the story on this guy. And today he's one of the world's richest men from trading, Okay, and it's not Forex only. He trades everything. When he trades, the world looks at him and follows him. There's copy trading for you, right? Not what you think copy trading is, but obviously he doesn't copy trade. He displays an interest in something, and the world watches and they follow him. George Soros. Okay, so you have a look at his images, see pie charts, graphs, pictures again, blah 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 blah. And we go back to our country, South Africa. And if the world's watching, my apologies. We are a new democracy. We're getting into everything. Well, we're not a new, we're now 20s now. So we're this young adult meeting the world. So this is us, right? And I go and I Google top Forex South African, top traders or whatever in South Africa. And my kid comes back and he looks and he comes back to me. He says, "Dad," I say, "Yes, my boy." He says, "I know what Forex is." And I say, "What's Forex?" He says, "It's cars and money." It's cars and money, Dad. Because there's money. Where's the charts? He says, "Okay, here's a chart." Where's the charts? There's cars. There's cars. Okay, there's a guy with a laptop. Where's the charts? There's another car. There's one little chart. There's a chart. About time, All right. Look at that. That's a sad picture. This one here. I don't even know is that guy in an aeroplane. Oh, he's in the aeroplane. See? Come on. Right? It's not coming back. It's not coming back. What is there? Look at that. No, it's not in an aeroplane because there's a poor, I wouldn't like to use the word, but there's a guy that collects rubbish for a living in the background. And there's this guy trading Forex in a car that looks like an aeroplane. I think I know this. Jason Noah. Yeah, I know. I heard of him. Okay. Apparently he's a billionaire, dollar billionaire, which is highly unlikely. Meaning, I think I read somewhere he's got $8 billion, which he has more money than Patrice Motsepe, and I don't think that's true. But who am I to say? Okay. And I go through this here, and this is our conception of forex trading. And I look here, look at that, 665 views, 665,000 views. Okay, that's a small one. 27 views, 186 views, 4.2 million views. But that's forex trading for beginners. Is 1,200 views, 4.5 million views. You know, is 62,000 views, 59 views, doesn't matter. 19,000 views, all the money. 6,000, 11,000 views. You see a picture of money, you view it. There's this, I heard of this lady, 18,000 views, almost a million views here. 17-year-old, right? And you go on Google or YouTube and you search this, and you come up with this pictures of guys really doing a lot with forex, and it's not that. Those pictures will turn you into greed. Greed will make you into a trade without proper analysis. The trade will go south. Fear will set in. You will not exit that trade because you believe you are this person that's going to own all these cars, these big houses. You're going to sit inside a car that looks like an aeroplane, and you're going to be doing forex things. No, it's not that, guys. It's not that. You take what you need from the market and you leave it, and you come back the next day if you want to. If you don't want to, we don't mind. The market's there. Nice thing about forex is the market is recession proof, right? The market has to continuously move all the time because it's forex trading taking place all the time. So what do you need, right? So here's my risk management tool I have, and I changed it. I set it to industry norm, which is 2%, which means of this 50,000, well, it's 12 American cents short of $50,000. Open up a demo account. Partner with my prop trader. We'll get into prop trading. We'll have a quick discussion on it. There's a lot of good videos out there on YouTube and on Facebook where they actually tell you which are good prop firms and not. And surprisingly enough, I'm not digressing, the way the world has changed now is there's a sudden emergence of prop firms all over because they know the world, like I said, is no longer what it used to be. People are being unemployed, becoming unemployed, losing their jobs and finding an alternative, looking for some form of income. And they take it to prop trading, and people have seen this. Some are good prop traders, some are not. And there's some ridiculous prop traders out there. This one guy just didn't know how to edge in on the prop trading market, so he came out that he's an environment-friendly prop trading firm, and every time somebody opens up an account with him, he will plant a tree. Thank you very much. Okay, planting a tree, right? We know it's important, but I'll plant my own tree. All right, I'm not gonna. I'm with an environment-friendly prop firm. These guys have to make money for me. So we'll get into prop firms later. We're just looking at risk management, and I'm prepared to lose $1,000. And based on my appetite for risk, I'm just going to put that up here. You can see the ATR. You all ought to know what the ATR is. It's more or less the same like the ADR, the average daily range. This is the average 2 range, and I put it at 22 because it's 22 working days in a month. My risk percentage is 2, so I'm prepared to lose 2% of my equity. 2% of 50,000 is $2,000, but in the same way I want a risk to reward of 2:2. So if I'm going to take a trade here, this thing's going to advise me where my take profit is and where my stop loss should be. And this is what my problem I have with signal trades, where they just come in and say buy, sell, and they don't tell you what time frame. They don't tell you anything. You just buy and sell, right? Yeah, the decision is up to me. But to make that, look how that thing has jumped up to 5.31 volumes, right? When I put my proper risk analysis management up, my percentage, mine sits at $120, and I have to buy a very small amount and make a very small amount of pips. So let's just subtract one from the other here to find out how much pips is expected from this. And we'll just see quickly. 6977, that the take profit, minus where we are now, and then 6994. 699, let's make line 5. So we got to move 18 pips, and 18 pips, let's just take this negative thing out, times a lot, 5.31 is equal to almost 95 pips, and almost 95 pips is your $1,000. And that's where we are. This is what the tool does to you. So let's close this down, and let's, in fact, let me bring it up. I showed you take profit. I want to show you take loss, stop losses. So let's do this again. Take profit was that. Let's go from 70.013 at my stop loss, if I'm going to go into a short, minus what the price is here, right? Not the difference between the two there, because take profit would be moving towards a positive, stop loss would be moving towards a negative. So the difference between the two is actually double. So 7013 minus 6994. And we had 19 times 5.31, that's the lots. And we had 100 pips, right? 100 pips is $1,000. And there we go. Okay. So if I were to enter a trade now, I need to move 18 pips, or let's just divide this by 5 again. Let's say 20 pips, right? But I gotta get 5 lots going here, right? And 5 lots, in 5 lots, I must get 20 pips, and 20 times that, 5.31, I'll get my 100 pips, and my 100 pips will give me my $1,000, right? And that's how you trade. Now, that is because your risk is 2% of your equity, right? Let's close this down. And let's see if we can see 20 pips somewhere here, right? Our server is still on. It's Friday evening in South Africa, and American markets are closing soon. There's a Euro GP shark fin at almost 7 o'clock. It's almost 7 o'clock. This happened right now. There's a shark fin by Euro GP 30. And let's just see if we see a shark fin. Well, there has to be a shark fin. It's a signal. And the shark fin has just started. Right? It's just started. There's your 3D. Okay? It's just started. And I can tell you they're raising the level of expectancy here. They're taking you up. And there's an Asian box right there. They're taking you up. Okay? Look at this one here. There's a USD CFA, and one just happened now. EuroCAD 60. It happened right now. You've seen it. EuroCAD 60 MBL add-on buy. Come on, dude. I'm staying away from that other shark fin, okay? EuroCat 60, it's heading towards a shark fin, but it's a MBL. But look at that arrow, that candle, sorry. Candle's a bit, it's not, there's the MBL. Well, that was a 7 o'clock entry, eh? What time was it? On the dot EuroCat, oh, it was a semaphore. Sorry guys, it was a semaphore. It was a semaphore. Right, there's your semaphore, number 4. The semaphore is here. You can see there's your semaphore. It's going to go down, right? It's going to play around you. This is Friday. They play around with you. So I'm going to pass up on that one day, right? And this is the ability to cherry pick. In fact, what we can do is we can go look at a 4-hour trade. See if I can find a 4-hour, right? Because they're still good. And, 4-hour would start at 4 o'clock. There's one here, GPCFA, peak formation. At 4 o'clock there was a peak formation high, which told me there's a possible sell on the GPCFA 4-hour. Let's have a look at that. All I'm trying to do is find 20 pips, damn it. GPCFA 4-hour. There's your possible sell, right? Okay. At 4 o'clock, this candle is still in that. It's going to change at 8 o'clock. In an hour's time, it will change. It will jump over. There's 57 minutes left on this candle. So I like this info thing. So it's heading down. If I look for 18 pips here, that's what I normally do, and I see there's an order block there, it's gonna maybe hit that order block, right? I look at the importance of a semaphore here, and I ask myself, is it, well, it's a big semaphore. Is it a big boy? No, it's not. Right? Yeah, it is. Well, is it? Right, so this is on its way down. It may retrace, come up slightly, but this is the end of the road, as far as I would say, for GPCFA. So for me, and if I take this onto a 1-day TDI, right, it's coming up, but it's, yeah, well, it's heading towards overbought, so it may swing down, right? And it's starting to swing down here. This is the end of the shark fin. Now remember what I said to you, a shark fin must come back below and cross below the volatility band, right? So it's in the process of retracement or reversal. I would say more reversal than anything based on this, the big semaphore here. And the last thing I would do is precise my TDI on chart, which will show me how far it has to go to crossover, but it has to cross, and there's an order block there. There's an order block here. It's sitting on an order block, right? Is to just do my last assessment and to say to myself, what does the 1-day candle look like in comparison to looking to the left here? Let's minimize this somewhat. And those lines you see are your Asian session. We take out Steve, sorry. Who's Jeff? Oh, okay, I know who's Jeff. Steve's work time. And just to give me some clarity. And there's a 1-day there. So this 4-hour may come up to contest this one here. So there's a trick up his sleeve here. Easily. There's 2 of them. It went down, went up. It may come up and contest it. They sit in spot on with one another. He's going to play around here. But one thing's for sure, same like I mentioned the other day with the New Zealand USD, where you had this at the bottom, I said it will go up. We just jump over to the we come back here, we just jump over to the New Zealand USD, see if it did come up. Where is the New Zealand? Yeah, it went up. And now it's going to retrace somewhat and then go back up, right? And even here I can look for my 20 pips. Even though that's a bullish candle, right? And there's 53 pips in. So somewhere along the line, you're going to get your 20 pips. Somewhere along the line. This is where you have to come in and do your analysis. So you have to say, can I get my 20 pips to get my $1,000 based on this computation here? And looking at this, I'm saying is a breakout. Remember, semaphore is a breakout, but a breakout is followed by a retracement. And in that process of retracement, you're going to get your 20 pips. How far this is going to break out, we have to ask ourselves. It may hit that ADR high, right? This green line is just a spread line. It's not a order block or anything. You see any supply or demand in the area? It's way up there, right? And if you know the laws of supply and demand, it's going to come here probably. It's going to maybe double bottom and go hit this supply area and come down again, right? So we're looking for 20 pips. So those guys who look for 100 pips with one lot, you have a distance to go. This is an intelligent tool to help you. So I'm just gonna pause it and bring back mine and show you why it's so easy for me. Okay, I changed the settings and you can see we're back to Andre prepared to lose $125, but also wants to make $125. We do that quick calculation again. We bring up the calculator. We look at 6970, right? Remember, pips start from the fourth place, the fourth character behind the comma. After that, it's points. So that's 0 pips, that's 70 pips, that's 970 pips, and so it goes, right? And we look at the price here right now, 69.95 minus 69.95, and for me to lose this trade on $125, right, I have to be at a loss of 25 pips and I'll lose $125. And the same would hold true for take profit. So I'm looking for $125 is just 12 pips. And all I do is on a 4-hour chart, say to myself, well, from that point, based on my top-down analysis, is it going up, is it going down? What do the TDIs tell me? What do the EMAs tell me? The switch of the TDI on chart, let's see what the EMAs tell me. That it could be a problem, right? And that infamous New York reversal, bounce of the water, that could be taking place. But let's just say I'm going to go along with this, right? And I need 12 pips to make $120. So from there to there, on the ADR line, there's 14 pips. And I just have to now make a decision, right? These signals enable you to make a better decision. These semaphores, they are not to be traded upon. They are there as a caution. Be careful, something is happening here, right? You don't get semaphores on every candle. The semaphore happens when there's a breakout, right? And then it leads to a reversal, as you've seen here. And there's your reversal. If we had to take that trade yesterday, or whenever we spoke about it, and we went from notification of it from there to there today, and there's no exit as yet, there's no blue X here, right? we would have gotten a nice trade, 1, 2 to the coming there, of 43 pips. Right? If we had to take the MBL when we got it there, right, from there to there, and gone out at that exit, that would have been fantastic. Let's put on chart TDI. Why are you doing this? Okay, and you can see it's out of the volatility bands, and when it crossed there, it closed, and that trade, that was 43 pips. Watch what this one does, right? Let's say midpoint to midpoint. That's 154 pips, guys. Over that, well, that's 4 hours candle. 9 times 4, 9, 18, 27, 36, that's 1.5 days, but you got $1,500 from that trade. And if you were going to do a top-down analysis, you would have seen that this is really a good trade. Here's a one-day TDI. And close those candles up. Put in a one-day candle, you would have seen, wow, that is a massive drop. That candle there, put your Sonics back in, there you go. So this is for the risk taker, the guy that wants those big profits. Me, myself, and I, we look for what we want. If it was shark fin, like I said, I will definitely go for shark fins, right? Because I know it has to come back over that blue line. It's like the law of gravity. You'll never ever, never ever get a shark fin where it refuses to cross. No, I don't want to cross the blue line. No ways, dude. It's got to cross the blue line. It's got to come back. It's got to come back. You have to take a bit of drawdown along the way, but it's got to come back. It has to, right? This is gravity in Forex, the volatility band and the price action line. It's got to come back. Those are like guaranteed trades, right? The MBL are safety trades. It's crossed over into a seller's market, or it's crossed over into a buyer's market. And yeah, you can see it has to come back. There's never ever a TDI out there with this flipping green line, this price action line, like, no ways, I'm not going down again. No, it has to come back. That's why it's really a good trade to take. So you use all of these signals and confluences, and you get together and you make a decision. The best decisions to be made are shark fins. There's it there, that big one. Right, there's a shark fin, but very narrow. You also have to say, look, it doesn't mean it's a shark fin, it's a great trade. But you always have the opportunity to go and look at your one-day TDI or your on-chart TDI and make a decision from that day. And you can see this decision is quite good. So there's a lot of drawdown. You know, it's ranging. It's here at the bottom. Why is it at the bottom? Because of the big boy semaphore. You know, I got what I wanted. Now I'm going to play around. This is at 123 or 12-2 trade that Steve talks about. It's going to play around here, and then it's going to jump up into a straightaway or safety and all of that. All right, that's top-down analysis without using these little boxes. Now and then I use them. There's something about the boxes I'll show you in another video that will also give you a signal, but it needs to stay on your chart and your computer needs to stay on. With us, you can go away, take your smartphone with you, and close the trade when you get a signal. And trust us on these shark fins, right? Trust us on the shark fins. I should put the signals up on another video and just leave shark fins and show you what it looks like. Trade on a shark fin. You know, shark fins. There they are. Right. Hope you enjoyed that. It's Friday evening. I'm a teetotaler, but I'm still going to enjoy the evening with my family and friends. I hope you have a good, safe weekend. Remember COVID. Stay safe. Stay positive. Raise your awareness levels. Read a bit on Forex. As soon as our website is fully functional, good documentation available. Enjoy the weekend, guys. Have a good weekend. Cheers.